The Auditor-General's 2016 report on 1MDB had been amended on the orders of then Prime Minister Datuk Seri Najib Razak, Utusan reports citing unnamed sources. According to the news portal, the changes ordered reportedly involved the removal of parts mentioning his and Lotek Joe's involvement in the fund. These omitted paragraphs allegedly revealed that Najib was well aware of the mismanagement of 1MDB, which was linked to his involvement in the fund's finances. The Daily's sources say the amendments were made at a meeting held at the Prime Minister's office in the presence of, among others, then Auditor-General Tan Sri Amrin Buang. According to Utusan's sources, the current Auditor-General Tan Sri Dr. Madinah Mohamad has presented the original report to the PAC. She's expected to table it to the Cabinet in the near future. Sime Darby Plantations saw a sharp fall in first quarter earnings from some 1 billion ringgit a year ago to 115 million ringgit. The group says the plunge in earnings was due to lower average CPO and palm kernel realised prices. Revenue for the quarter shrank by 14% to 3.04 billion ringgit. Managing Director Tan Sri Muhammad Baki Saleh says the business environment remains challenging as the CPO price traded at a low of 2,065 ringgit per tonne in September. Prices are expected to stay under pressure thanks to a seasonal rise in production, higher inventories, as well as sluggish export demand. However, the ongoing US-China trade war and a weaker ringgit could improve demand and lend support to CPO prices. The group expects its recurring operating performance for the financial period ending December 2018 to be satisfactory. IOI Properties saw its first quarter net profit halve to 111.97 million ringgit due to lower contribution from its property development segment. Revenue slid 37% year-on-year to 560.1 million ringgit. The company says it saw lower sales from Singapore, with fewer units remaining for sale in the Tri-Link, as well as lower contribution from projects in Malaysia. However, these were partly offset by higher contribution from its operations in China, with strong take-up rates seen at its high-rise condominium in IOI Palm City, Xiamen. It says sustained development in mainland China is expected to contribute positively to its future results, as it proceeds with more mid to high-rise condominiums and town villas worth 4 billion renminbi in the same development. As for the property market in Malaysia, IOI Properties expects it to stay subdued in the short term, although it remains cautiously optimistic that its properties will continue to draw prospective buyers. Independent power producer Malakoff Corp saw third quarter net profit climb 30% to 83.5 million ringgit, mainly on lower income tax expense. Top line improved by some 5% year-on-year to 1.9 billion ringgit. Malakoff says revenue rose primarily due to higher energy payment from Tanjung Bin Power's coal plant on the back of higher applicable coal price. Also boosting numbers was Sagari Energy Ventures with the higher dispatch factor and increase in natural gas tariff under the extended power purchase agreement. However, these were partially offset by lower energy and capacity payment at Tanjung Bin Energy due to plant outage. For the cumulative 9 months, Malakoff's net profit shrank by 29% to just under 189 million ringgit. Revenue came in 2% higher at 5.5 billion. Looking ahead, Malakoff says Budget 2019 indicated a balancing of fiscal consolidation and growth, which augurs well for sustained domestic demand. This, it says, will provide a firm and robust footing for stronger power demand from the industrial and domestic sectors, which would serve as a catalyst for the group's earnings. Bumi Armada reported a third quarter net loss of 502.8 million ringgit versus a net profit of 123.7 million ringgit a year earlier, as it recognised significantly higher asset impairments. According to the oil and gas support services provider's income statement, impairments during the quarter rose to 563.5 million ringgit from 1.9 million a year earlier for its FPO, floating production and operation, and OMS, offshore marine services businesses. Meanwhile, revenue contracted by 8% to 588.1 million ringgit. Bumi Armada says it is currently focusing on optimizing its cost structure and looking to strengthen its balance sheet via monetization of underutilized assets and generating sustainable cash flow. For the 9 months of FY18, the company reported a net loss of 1.04 billion ringgit versus a net profit of 288.4 million a year ago. Revenue was higher at 1.8 billion ringgit compared with 1.7 billion previously.